So I've been telling you guys that the layoffs are going to accelerate in the market, and unless the major layoffs happen, a recession is not here yet. Welcome back guys, it's Cash Boost, and today we're going to be taking a look at some critical data on the unemployment, what layoffs are happening, what some crazy professors are saying from top universities, and where the stock market is headed. We'll also take a look at some of my positions in the past. I've taken a massive position on China. We'll explore that as well. But before, let's head over to my screen and take a look at some data. So this chart, if you haven't seen this before, is a really important chart. And the reason is because this really tells us where the recession probabilities lie. Every gray bar that you see is a recession, and before a recession hits, usually it's the unemployment that ticks higher. You see that? You see that gray bar over here, and the unemployment just continues to rise like that. Look at that. This one, look at this one, you look at that one, and this one. The unemployment usually rises aggressively before a recession materializes, and the labor market is starting to weaken just a little bit over here. We see a lot of layoffs and a lot of people are losing their jobs, at least in the tech sector. Is this the beginning? We will have to see. But let's see what some professors are saying about what's going on in tech. So this guy is a professor in UC Berkeley, and he just came out and he's like, tech degrees are no longer a guarantee for a job. And this is insane because UC Berkeley is one of the greatest colleges in the US. The best engineers are coming from UC Berkeley, and he's like, even the 4.0 GPA students are not landing a job. Insane what's going on. He is worried, I am worried, and I think that he might be right that some of these jobs are just purely gone. They're either being outsourced to India and China, or they're just gonna be eaten up by AI. Tough luck, this is how it is. Let's see what else is going on. So USAA is announcing more layoffs in San Antonio. They are losing people like anything. They want to maximize profit margins, and they want to make sure that they stay as competitive as possible. So they're going to have to give the pink slip to a lot of people, and that's just how the business goes. The unemployment numbers are taken up, and we see a lot more layoffs. Same thing goes with Disney. Take a look at this. Disney is cutting 300 corporate employees in the latest wave of layoffs. Absolutely insane stuff going on in some of these markets, and Disney is like, yeah, we don't need a lot of these people that we hired. We just don't have the money to keep them on board, and we want to maximize our profit margins because some of our businesses are just not doing as well as we thought. It's crazy when the C-suite people make a mistake and they lose millions and millions, tens of millions of dollars. It's okay. They just get a tap on their hands. But when some regular dude messes up in the office, they get written off. It's absolutely insane. And let's head over to charts and see what's going on in the stock market. We will start off with SMCI. A lot of you guys were like, SMCI is the new Nvidia, is the new whatever. You know, I just don't see any of that because SMCI clearly is having a terrible day, down about 12% on the day. It's insane how lulu some of these people are on the internet. They're like, yeah, SMCI is going to the moon. I'm taking massive positions, massive call options on SMCI. But in the end, look what happens. The Wall Street is not stupid. They see everyone pouring in, and that's when they decide to short the market. And for the people who have taken call options on SMCI, I just have one thing to say to you.
Emotional damage.
But let's see, could we have prevented a lot of this emotional damage? We'll take a look at it from a daily chart. Let's take a look at it. So, number one, trading below the 200-day moving average. Absolutely no. If you're long on this, you want to get out right here. And number two, it's trading below the 20-period moving average right here. Trading below both of these averages, the averages are heading down, guys. That means that the stock is in a downtrend. You don't even need to know the higher highs, higher low, market structure, any of that. Just look at some of these lines. If these lines are heading lower, that means that the stock is heading lower. It's not rocket science. It's just visuals at this point. But today SMCI is down about 12%, and those call options got absolutely destroyed. Let's see what else is going on. So I disclosed my position on China, And my position on China was that the good times are coming. Because the good times are coming in China, massive stimulus packages released in China, and the market is probably bottoming. I took a position right here when I saw the market structure building up right here, and ever since then I'm up like 10%. Absolutely insane. Not selling it because I think that the bottom is in for China. Whenever everyone thinks that a recession is coming, it's probably the time that the recession is already there and it's almost over. When everyone is in peak fear and they're selling the dog, they're selling the cats. Is that what Trump said? Oh, he said eat the cats and eat the dogs. I'm sorry, got it messed up. But Mr. Trump, how are we gonna take China on this? What are we gonna do?
I mean, I see this. It's so incredible. Ding, 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 ding. Boom. Okay. Pshin, boom. Star Wars.
Okay, that's how we're gonna combat China. We will do Star Wars. So the bottom line is that the bottom is probably in on China, and I'm holding a massive position on the large caps of China. On the weekly chart, let's take a look at it from a macro perspective. Very bullish candle. It's just coming out of a basing structure right here. You see that? You see that massive V recovery? That's the kind of stuff that you want to see. You want to see a massive recovery and then some sort of a structure, some sort of a chop. And then I am seeing this massive candle, absolutely insane percentages, a 15% candle. And that's not a meme stock, that's not a penny stock, it is the large caps of China. It doesn't get better than that, guys. Not a financial advice, but I would pay some close attention on China. Let's take a look at what's going on in the US markets now. S&P 500. Record highs. Congratulations, US guys. You have done it. About 0.4% up. It's record highs on the S&P on the weekly chart. Last week I told you that this week's candle is going to be a green candle about right there. I was absolutely spot on with the prediction. I don't make a lot of predictions, guys, on this channel, but this one I saw it coming because I've traded for a very long time. Let's take a look at the Qs. What's going on with the Qs? So Qs is doing some really interesting stuff. Coming out of this massive resistance zone right here, cleared this up and it's heading for all-time highs. The next target is pretty simple. 500 is the target on the Qs. If it reaches that, I can expect Qs to either play sideways or maybe pull back just a little bit. Let's take a look at the IWM. So I told you that IWM is going to be in a sideways market. I don't see a clear direction on IWM. Some sort of a chop is in place. Something like this maybe is going to happen. But as of now, no confirmations on IWM. We want to see a strong candle to the upside if we want to take on those call options. If you want to take on those put options, again, a bearish candle, a massive big red candle is what we're looking for. Let's take a look at the dollar index. What's going on with the dollar index? Everyone is like, Cash Booza, you are absolutely wrong on the dollar. And as long as this holds, I am probably okay. If the candle closes below, I am probably gonna get scared. And my heart right now, you know what it's doing? It's doing this. And let's take a look at some of the trades that we're doing. So Microsoft, again, it's a great trade on Microsoft. Look at that. It came out of this resistance level. Right here was the resistance. Came out, coming down, and then the reaction, a perfect reaction on Microsoft. Look at that. And I can clearly see maybe a little bit of chop on Microsoft, but in the end, Microsoft is going to be heading higher. It's probably going for the all-time highs, and I won't hold it against you if you took a trade on this to the upside, because this is the kind of stuff that we want to watch. So on the weekly, Microsoft is still holding the 20-period moving average. That's a green sign. And if you take a look at it from a daily perspective, this is still trading above the 20-period moving average on the daily, still above the 200 and forming some sort of a structure. I can see maybe another candle, something like this, and then maybe something to the upside. So be cautious and be selective in these trades because these markets flip like this. So you gotta be careful. Let's take a look at my favorite gold. Again, look at this, record highs. Let's take a look at it from a monthly perspective right now. Absolutely bonkers. Look at that, those massive green candles. If you got in on gold at this level, at this consolidation level, let's take a look at how much up you guys already are on gold. You guys are up about 30%. And I don't blame you for holding gold because this thing isn't a rocket ship. Long-term trend is broken and it is heading for the skies. That's all I had for you guys today. If you guys like today's show, give me a thumbs up. Subscribe to Cash Booza. You can watch my previous video right here and the one before right here. And thanks for watching, and I'll see you tomorrow.